Hey, Craig from EMX here. In this video, we'll talk about hedging some or all of your Bitcoin exposure on EMX. A few quick definitions. Hedging means to offset the risk you have holding some position. As an example, say I have one Bitcoin sitting at Binance. I'm exposed to price movements up and down on that one Bitcoin. You can say I have an exposure of one Bitcoin. That is, if the price of Bitcoin goes down $100, I lose $100. I'm not hedged at all. Now, let's say I take the 0.1 of that Bitcoin from Binance and move it to EMX. And on EMX, I take a 0.5 short Bitcoin position on the Bitcoin perpetual swap, BTC perp. But BTC perp is a derivative that tracks the price of Bitcoin. So let me go ahead and trade into that position. On BTC perp here, click market, 0.5, and sell to go short half a Bitcoin. Okay. So now my net or total Bitcoin exposure is down from one Bitcoin to half a Bitcoin. But this is important. I still own one Bitcoin minus the blockchain transaction fees sending it across. That one Bitcoin I have split across Binance and EMX is now 50% hedged due to my 0.5 Bitcoin short derivative position on EMX. If the price of Bitcoin drops $100 now, I lose $50. That's what we mean by saying 50% hedged. Of course, if Bitcoin appreciates $100, I only make $50. So that's a way to reduce your exposure to Bitcoin while keeping your Bitcoin. Of course, if instead of going short half a Bitcoin exposure on EMX, I took a half Bitcoin long position on BTC perp, I'd be levered up. So I'd still have my one Bitcoin, but I'd have a 1.5 BTC exposure. If the price of BTC goes up $100, now I make $150. So you could say I have a 1.5x effective leverage. In the next video, we'll talk about diversification, which just gives a ton more interesting options than what we talked about here, which is simply offsetting your BTC exposure or risk using a BTC derivative.